Continuing from last week, we did finally get that weaker labor number from the BLS report, and it wasn't really expected by Fed members, so we're hearing whispers about the possibility of a 50 basis point cut in September, and we've even heard talks of an emergency mid-meeting cut, which really isn't likely. We got several Fed members that have explicitly said they won't do it mid-meeting, and they did acknowledge that it's appropriate to cut rates soon though, so I would expect at least a 25 basis point cut in September and hope for a 50 basis point cut. Just keep our fingers crossed there. Labor market is definitely softening. Unemployment applications came down a little, and continuing claims were up slightly, but both are still at higher levels. And those continuing claims are probably understated too, because if people don't find a job and then their benefits run out, they're not included in the count. The CEO of ZipRecruiter actually came out and said seasonally adjusted hires have gone down every month since August of 2022. So consumers are also continuing to show signs that they're struggling. We're seeing delinquency rates on credit cards and car loans rise. They're at their highest level in over 10 years. And then also buy now, pay later services are seeing high delinquency rates as well, which is of course a sign of weakness there. And with the amount of tappable home equity though, many could have a get out of jail free card there. Next week I'll be back. Important inflation news coming out with CPI and PPI for July. That's consumer and producer inflation. And if we see shelter costs align with real-time numbers, we could see some significant progress in lowering inflation. I'll also have an update on retail sales and builder confidence, as well as starts and permits on Friday. But have a great weekend, and I'll talk to you next Friday. If you've got any questions or there's anything we could do for you, feel free to reach out.